It accelerated. It obviously was definitely not indiscriminate, though, and I don't mean that necessarily in a positive way. It was not everybody saying absolutely sell everything, be aggressive about it. It was basically levels giving way. We actually stretched the downside a little bit of this move to the early year lows. And I think that's going to be where we're going to have to start the conversation and say, what's changed since then? It's been a derating of stocks for a long time. Basically, investors unwilling to pay up for tomorrow's earnings. And that's been the story for 8 months, and it accelerated today. I do think it's not good to close on the lows, just on a very short-term tactical level, which we pretty much did. That being said, I do think it's a net positive that you finally got some of the glamour stocks that everyone thought could be bulletproof through almost anything, really got hit hard today.
I mean, FANG has collapsed.
Yeah.
And we're negative for the two major indices. So all year we've been saying how it's Europe that's down 10%, it's Asia that's down 20%, but the US is still higher. That fell apart today. Nancy, what's your take on this latest sharp leg of the selling? Is it now a buying opportunity, or do you have to let it settle?
I think, well, you always have to let it settle because this becomes self-fulfilling, and we've seen it. I think it is a technically driven sell-off because the earnings have not been bad. I mean, we do know, however, that they are decelerating. We know that we have midterms coming up. And so I think we're sort of getting that midterm correction, and then we're also seeing investors kind of recalibrate to the new lower earnings levels in 2019. The thing that I'm most concerned about that I heard on all the calls is prices are going up across the board. Industrials, consumer products, and that's going to push inflation. And actually, ironically, that might actually be good news for stocks if the Fed backs off a little.